Hello and welcome back to Explain the Charts, where we break down complex market data into easily understandable insights. Today, December 22nd, 2024, we're focusing on the EURUSD pair, a major currency pair reflecting the value of the euro against the US dollar. Before diving into the charts, let's review the latest news and events that may be influencing the EURUSD's price movement. Recent reports indicate a softer-than-anticipated United States personal consumption expenditure (PCE) inflation, which boosted the euro's performance and pushed the EURUSD above the 1.0400 mark. Conversely, a previous five-session decline hinted at bearish sentiment, with the euro weakening against the dollar. However, the recent rebound suggests that bullish sentiment is growing. We'll look at different timeframes to see these events' impact on various candlestick patterns. Now, let's examine the daily chart for a broader perspective of the EURUSD's price behavior. Notice the overall uptrend in the EURUSD in recent weeks. However, we see recent price consolidation, which might indicate indecision among traders. Let's pinpoint key support and resistance levels on this chart. The 1.04 to 1.05 range currently acts as a crucial support zone. A break below this could signal further downside. On the upside, the resistance level is around 1.06 to 1.07. These price levels are crucial and should guide your trading decisions. Note the significant volume spikes accompanying notable price movements. This often reveals significant shifts in market sentiment. Let's switch to the 1-hour chart for a more granular view of the EURUSD price fluctuations. Here, we can better visualize the recent volatility and identify smaller-scale support and resistance levels within the broader range. Notice how the EURUSD retraced slightly after its recent surge, suggesting profit-taking or a temporary pause in the upward momentum. Short-term traders should pay attention to these shorter-term trends and volatility. The moving averages, especially the 20-period and 50-period moving averages, can help you identify the potential direction of short-term price movements. Let's zoom into the 15-minute chart to see the very short-term price patterns. The increased frequency of price action makes this time frame perfect for scalping opportunities. However, it is also the most volatile time frame and requires quick decision-making. Focus on the candle formations, support and resistance zones, and volume. Are there any strong patterns or trend reversals that you're noticing? Now, let's look at the recent period between December 17th and December 19th on all charts. This period reveals a clear example of the news affecting the chart. Initially, uncertainty caused price consolidation. However, when the inflation numbers dropped, the price swiftly rose in the 1-hour and 15-minute charts, showing fast bullish behavior. Traders who identified this shift early would have seized profitable opportunities. As always, risk management is paramount, therefore it is important to avoid being over-leveraged. We must also always remember that the market is not always predictable and to always set stop losses accordingly. To recap the key takeaways, let's revisit the crucial price levels. On the daily chart, 1.04 to 1.05 is the primary support. Breaking below this suggests further decline, while 1.06 to 1.07 poses resistance. On the hourly chart, smaller support/resistance levels within 1.04 to 1.05 range are particularly significant for short-term trading decisions. The 15-minute chart provides volatile opportunities to benefit from very short-term movements. However, it is important to use this time frame with caution. Predicting future prices is never certain, but current market conditions suggest a moderate likelihood of a continued upwards trend in the EURUSD in the short term. A sustained break above the 1.06 to 1.07 resistance would solidify bullishness. Conversely, a decisive drop below 1.04 to 1.05 support would reinforce bearish sentiment. Keep an eye on the overall market sentiment and economic indicators such as inflation reports from the Eurozone and US. Always prioritize risk management. You can do this by implementing stop losses to mitigate potential losses. We can also place a pending order near 1.06 to take advantage of potential movements.